My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey gang, welcome back. Today my special guest zooming in from California is a gentleman that is very familiar with short-term rentals. He lives in one of the most expensive places in the country, and these days he's started to poke his toe into the whole commercial real estate investing world as well. So Matt Mainini, welcome to the show. Great to have you.
Glad to be here, Dave. Thanks.
So Matt, give us a little snapshot of what real estate investing looks like for you. What do you invest in? What does the portfolio currently look like? Just gives us that 30,000 foot perspective.
Yeah, absolutely. So, humble beginnings in Pennsylvania, born and raised, and came out to California kind of for, the idea of the gold rush, the American dream, right? The potential. So actually, when I was interviewing schools, just everywhere far away, just to get out, branch out and learn. And I sure did, so San Jose is where I landed, and Silicon Valley, right?
Now that is one of the most expensive markets in the world, that's for sure.
Yeah. But it gets worse. I moved to Santa Cruz County, which is just south of Silicon Valley. That's kind of squeezed from the tech scene, the ocean, tourism there, and then the mountains where it's difficult to build, and the city permitting process, which is a bear, making it difficult for anyone to build here. So I cut my teeth in Santa Cruz County. I've got about 10 units or so here that I self-manage. My wife and I together. 4 short-term rentals, the rest long-term rental. I'm a buy and hold guy. I've been doing that for 10 years. And
so for the single family home long-term rentals, it's such an expensive market. How do you cash flow those?
Yeah, it's difficult. At first, you just work to pay it off, right? So I was working in the tech scene. I've since left that about 2 years ago, and I'm full-time in our real estate ventures now. But at the time, I'd funnel probably 90% of my income into the investing. So we tightened our belts. For 10 years, I saved and saved and saved. And I knew that was, while I didn't know how to invest, I knew that one day I'd be getting into it. And I pumped that money into my house and then house hacked. So in this area of a lot of California, coastal California, it's smart to house hack your home, meaning rent part of it out, right? And that's just easy money if you're willing to get into real estate and you're in a high cost market. The average home here, 1.3, 1.5, we're talking about boilerplate standard 3-2 house, nothing special at all. In fact, fixers for that price. So renting rooms, you'll make $1,200 a room.
Oh, so you're doing by the room, not even like a suite you're renting?
No, I'm not, but I look at it by the room. How do we get more bedrooms? What can we give up an office and make it a bedroom? Can we convert the garage? A lot of Santa Cruz, you see their houses and the garages are old converted things, some permitted, some unpermitted. The city is more willing to work with people today, but traditionally not so much. But everyone on my street's renting part of their house out. It's just kind of how we live.
You kind of have to these days, you have to. Look, yeah. Unless you bought the house back in 1953, and in which case you're sitting pretty.
Yeah, and in fact, I recently purchased my neighbor's property, seller finance, and that's the way to do it, because if you can negotiate great terms and then have a plan for how to split it up and rent it, you're able to float that property. And I mean, if your income and expenses are neutral by the end of the year, you're doing great in California. You want to snatch those up, build the portfolio that way, because even if you're not cash flowing, the appreciation is there long term. The demand for housing here, I don't know if I shared this with you yet, Dave, but in the last 10 years, I have had 0% vacancy course, it's a small portfolio, but the demand is so strong. When someone leaves, we get someone in the next day.
Well, okay, so I'm still confused because you're talking about price per room, but you don't rent by the room. So how do you rent out these long-term rentals? Like, what does that typically look like?
Well, like a 3-2 house or a 2-1 house or something like that. However you can a studio, for example, right? A studio, we have a grandfathered in garage that's cut in half. It's 200 square feet. It'll rent for $18,000 to $2,000 a month.
My goodness.
Right. And that came with
studio apartment, mini apartment kind of.
Yeah. Okay. Yeah. The demand is
so you've almost created, you got the main house, and then you've subdivided the garage and created another little mini suite in there. So you've kind of created a duplex in this particular.
Exactly. Or we'll close in an exterior patio that's already kind of closed and has a roof in it. They were already living that way in many cases. People around here are finding any way to live. I'm now working a lot more closely with HUD and Veteran Affairs because they are looking to place people, and their expectation, honestly, it's kind of sad, but their expectation is very low of what is, good housing. My level of criteria is higher than their are. So when we get to pick the tenant, they get to have a nice home, the resident, and we get government pay that's in excess of what the market rate would be.
Wow. That's amazing.
Right? Sometimes significantly more than market rate. So, there is some negative that come.
My understanding that's kind of your methodology then for the long-term rentals is you're not necessarily looking for them to be super cash flow positive, but at least to break even, right? Because the values are going to naturally increase over time. And then would it be fair to say that the short-term rental part of the portfolio is the one that's generating a bit of excess cash for you guys?
Exactly. Yes, the short-term does make more money. If you so with our strategy, we became cash flow positive on properties in around year 3 for the long-term stuff.
Because you paid down the mortgage a bit and rents have gone up.
And the refinances that can happen, right? The wind is at your back. You just have to be patient, right? So even in California, you can do that, or you live in the property, then move every couple of years. That's another strategy. I was willing to get property however I could manage to, and then hold on and rent it out. But as I've grown, I think that's a great strategy. But as I've grown, I've kind of grown into the idea of pursuing more cash flow properties, right? Okay. Not just the appreciation long-term hold thing. Certainly since I left the tech scene as well. So the short-term rental, it does great in, Felton, California, where we're at. It's kind of mountainy town, well-traveled or touristed, you give some amenities like pool, hot tub, and PlayStation, and throw in some benefits like free games online. So you give these perks, right, that draw people in. And business is booming in the summer, especially, but it keeps my wife and I a little too busy for my taste. So I think
you're managing these, I guess, right?
We are self-managing. We have some automation, right, to make it manageable.
You're probably not doing the cleaning necessarily, but you're doing the booking stuff and all that kind of stuff.
Yeah. And to the point, we have automated locks, automated messages, but it's hospitality, Dave. Like, you can't just let that go. You have to be on top of that, be responsive to the guests.
Yeah, you live by reasons, don't you? I mean, that's.
Yeah. They hurt when they're lower than 5-star. They hurt. And we've been super hosts for years now, and our standard is really high, but the guests expect a lot too. And it's a good business if you love hospitality, but I found more joy in the affordable housing space where you're finding a way to provide housing for those in need. To me, I just noticed early on, I was like a shotgun in real estate, just invest in something, see if it sticks, see if I like it. And as I've evolved over these years, I kind of learned what produces, the joy and fulfilling.
Well, plus I would imagine, as you're alluding to earlier, that those tenants are really appreciative of a decent place to live because they've probably been living in substandard, situations for quite some time. So living in a nice property, they're probably super, super happy about that.
There's a mixed bag, to be honest. Yeah. Some feel that way and are greatly appreciative to the point. I have a tenant that gives us a nice handwritten card every month with his portion of the rent that says, "Thank you. I love living here." I mean, isn't that amazing? And to be supporting our vets, it's perfect, harmonious. I love to provide it, and then he gets the enjoyment to live there. But others, I think social programs can be fickle because some people become dependent on it and expectant. And then, when you put little money in, some as low as I've seen $71 a month, and I'm talking about a $1,700 rental, and then expected to be handed everything. So you see it all in that space. You have to navigate that and be willing to work.
So what is it that appeals to you more about that side of things versus the short-term rentals?
I'm a utilitarian guy. Function, right? We have enough human problems that when I solve a guest experience that wants 90-degree temperature pool water instead of 85-degree, compared to providing a roof over someone's head that is in need, otherwise being on the street, that when you have those comparison, right, it becomes a little more black and white for me, where I think my time is best spent.
Yeah, well said. That pretty much illustrates it perfectly right there.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So, Matt, you're also starting to get into multifamily stuff. Tell me a little bit about that.
Yeah, absolutely. So, having lots of refinances, mortgages, there's so much paperwork. There's so much due diligence on every little unique property. Here in Santa Cruz Mountains, I mean, the properties are very unique. They take a lot of detail to get right, fixing the fascia, fixing this or that. It's all unique and takes time and energy to do, but they're smaller, right? So the scale isn't quite there for my desire now. I want to help more people and grow and have more, capability in the real estate space. So pursuing commercial multifamily assets, and I met some great people that are already doing it. And, if the synergy's there, if you feel like you have a common ground, I've looked at probably over 100 deals this year and said no to everything except one so far. And that's a hotel conversion project. I didn't set out this year to do it, but it was checking all the boxes for me that mattered. Is 60% will be through Veteran Affairs Housing project. And they're all studios and all 104 units all getting converted.
So are you taking that down by yourself or you're a co-GP in this project?
No, this is a co-GP. Mm-hmm. So I'm doing some capital raising, asset management, and just, learning from some of the best that have been in the business for a while. So that's my next level, right? To just move into a larger project where there, millions of dollars, not just my money on the line, and staying small in Santa Cruz Mountains. So, I can't get into too much detail on that project. We're still working on it, but I hope that succeeds. I believe it will succeed. It's simple enough to me.
It's interesting. I've interviewed several hotel conversion guys over the last couple of weeks on the podcast, and makes nothing but sense. It's so much cheaper to do that than to build from scratch these days. There's so much demand for it. You've got these older kind of well-used hotels that aren't popular anymore, that are getting usurped by the newer hotels. So it's just a beautiful reuse of that space that already exists. And it fills a massive need. So yeah, I'd see lots of benefits to it.
It starts to check all the boxes, right? And then when you think about what it needs, okay, you throw some kitchenettes, right? Like a simple kitchen and a plumbing wall that's already there.
Yeah.
Right. You throw in some sprinklers because it needs that. And then you're talking paint, vinyl floor, vinyl plank.
And then you got some flexibility. You can take two hotel rooms and create a 1-bedroom suite out of that, or you could take the one hotel room and create just a studio apartment. It's pretty much set up for that anyhow, and it makes nothing but sense.
And especially with HUD stuff that heads in beds, right? They need to place people. So the smaller the unit gets, almost the more desirable, because you can fulfill more of that need. Yeah. Like, yes, there are families with, 2-bedroom, 3-bedroom stuff. I haven't dabbled into that, but on the smaller scale, there's a tremendous need there.
Well, huge need. Matt, this is fascinating stuff. Congratulations on kind of finding your groove after zigging and zagging and doing different things there. And I think you said it very, very well. There's a huge difference between some nitpicky guest in a short-term rental fussing about their pool temperature versus putting a roof over somebody's head that otherwise would be on the street. I think there's no comparison there. So, hey, Matt, if people would like to connect with you, what's the best way for them to do that? LinkedIn?
LinkedIn would be perfect. Yeah, just look me up there, Matt Mainini. I'm based out of Santa Cruz, California.
Probably the only one in Santa Cruz.
I believe so.
Hey, Matt, thanks for being on the show. This has been a lot of fun.
Wonderful. Thanks for having me, Dave.
All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.